What is up, guys? Welcome back to another episode of Coin and Capital, and it's your boy Chris here. And today, ladies and gentlemen, we are going to talk about Bitcoin, because if you guys haven't noticed, Bitcoin is back at 90,000 off the lows of 85. The bull run is back, baby. In this video, we're going to talk a lot about technical stuff. Okay, there's going to be a lot of charts. Very technical heavy episode. Okay, so if it's not your thing, click off the video, and if it is your thing, stick around, because we're going to talk about what's going on in Bitcoin. We're going to look at alts. We're going to go through some mechanics, what I'm seeing in the markets, and then finally we're going to talk about what's next. So this is your kind of episode. Stick around. Let's get right into it, because ladies and gentlemen, the long awaited breakout is here. And no, I'm not talking about breaking out of prison. I'm not talking about the long awaited this. I'm talking about Bitcoin, 90,000. Let's talk about it. Okay, on the right, we have Bitcoin Weekly. One thing I would like all of you to understand, to look at, to internalize. Bitcoin Weekly. We have been sideways for the past 2 months. Okay. That white box on the weekly is what we're looking to break through over the next week, 2 weeks. Okay. Because that white box is what we consider weekly discount. Okay. So this white box is what we would consider weekly discount for anybody looking to go short. All right. ICT concept, fair value gap. So once we punch through that white box here on the weekly, we flip discounted shorts into now an area of discounted price for people looking to go long. Now when we look over to the left on the Bitcoin daily chart, we can see price has done just that. Okay. There's another white box here on the daily, another bearish fair value gap. Okay. So this represents a discounted spot for people looking to go short. And when we invalidate that and trade back into it after punching through, it becomes a discounted area to load up on longs. All right. Now you're probably wondering, what are these red and blue lines covering the chart here? Well, now that we have invalidated a short discount range and we've turned it into a discount for longs, the next thing Bitcoin has to do is, you see all those red lines on the chart? These are all areas people have taken short positions, whether it be massive spot or even built some leverage positions. Every high you see is somebody's entry point. Okay. Now behind everybody's entry point, especially if they're retail, are these blue lines, which is their stop loss. Okay. Which are buy orders. Okay. If you're going short to get out of the market, you need to buy. All right. So what Bitcoin needs to do next is absorb all of these sell orders that it's about to run through. Okay. And it's going to be doing this by hitting the sell order and then running through the buy stop on the other side of it. Okay. So in theory, what we have right now set up for Bitcoin is called a low resistance liquidity run. Okay. Meaning Bitcoin may have the strength to simply just power through all of this and absorb it on the way up. Right. Drawdowns could be expected if the sell orders are heavy, but I want you guys to understand the mechanics of what is going to happen as price pushes higher. Okay. Because price doesn't just go up forever. As much as I wish it could, it doesn't, because of the way markets and orders are structured in this very nature. Okay. So then when we move over to alts, you guys know the really the only altcoin I talk about on this channel is Solana. Okay. It's my pick for this cycle to get exposure to the altcoin market for various reasons. Top left here, we have the Solana weekly. Okay. Two things I want to point out. One, this white line we have on the candlestick chart, okay, that represents liquidity pool on the weekly, okay, where a lot of orders are sitting, right? A lot of buy orders are sitting. A lot of buy stops are sitting. Below that, we have the weekly RSI, okay? Oversold, overbought index. Very powerful signal on the weekly. That has ticked up positive, meaning Solana is turning from oversold, and all that oversold pressure is being transmuted into price go up pressure. Okay. Now if we go down to the bottom right here, this is what Solana looks like on the daily, okay? Pretty messy, very choppy, but a very crucial function just happened in Solana, okay? By that, I mean, when we look, we have our weekly liquidity pool in that white line, and then we have some blue lines here, okay? So just like on the Bitcoin chart, these blue lines are buy orders in the market, okay? Now we can see price hit the white liquidity pool on the weekly, and then we had two very obvious buy order placements load up in the market through a low and a higher low, okay? Awesome. But then price reversed and swept all of those buys, right, and liquidated a good chunk of them. This is smart money manipulation, okay? Because smart money will and has bought in on that liquidation of those previous buy orders, okay? Phase one, complete, okay? Manipulation through some liquidity so smart money can get in. Now we have a white box right here that we're looking to invalidate. That is step 2 to get a clear buy signal, go, go, go on Solana, right? This is ICT 101 for those of you who don't know. So again, just like on the Bitcoin daily and the weekly, we're looking to flip a bearish discount range, okay? We're looking to flip this into a bullish discount so people can load up at discounted prices before we rip higher, okay? We're waiting for step 2 to unfold on Bitcoin, and we're waiting for step 2 to unfold on Solana, okay? Patience, 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 guys. Those are just some technical fundamentals on how to read charts. What I think is the proper way. Some people may say support and resistance is the proper way, but we know on this channel, because we're a little smarter here on this corner of the internet, that liquidity drives prices, right? It's not support and resistance, it is liquidity. So in our technical analysis, we need to be able to map liquidity and premium discount zones to accurately gauge price movement, okay? On the other hand, we have some macro mechanics, okay? Stuff you can't read on a Solana chart, on a Bitcoin chart. All right, let's get into it, right? I'm talking the Federal Reserve balance sheet, the TGA, and the reverse repo facility, okay? These are things you cannot access on a Solana chart, on a Bitcoin chart. These are, in fact, great front-end liquidity measures, okay, in the short term. Now, like I just said, we know liquidity drives markets, and these have been metrics we've been tracking on the channel for a while now. Literally almost every other video, we look at least one of these charts, okay? This is painting a very clear picture. First of all, on the very right, we have the bank balance sheet of the Federal Reserve, central bank of central banks. It's going parabolic, right? They started QE light. They're not calling it QE, but it's QE, okay? The Fed is buying back its debt, and the balance sheet is expanding. Very positive for liquidity. Okay, TGA top left, slight uptick. This should continue to draw down as the government spends into the, what is it? It's not elections. It's every 2 years they do the vote of confidence or something like that. Forgive me, I am not from the States, but they will need to spend that down to manipulate their economy or whatever they do there. Meanwhile, reverse repo facility is down bad, okay? This is not rising to offset any of this positive liquidity, okay? In the past, we had the TGA coming down, the reverse repo falling up, okay? net neutral, right? This is no longer the case, okay? So once that TGA ticks down, everything green light on the short end of liquidity. Meanwhile, I was scrolling Twitter for the first time in like a couple weeks, and I came across a very interesting post here for you guys, which I'm hoping to break down and explain it a little because it is some quality stuff, okay? So this post is from Sminston with, okay, shout out Sminston, because he is onto something quite interesting here, okay? So, read this tweet for you. This box plot version tells a compelling story. When the PMI drops below 50 in a contraction, Bitcoin's median price sits at 1.47, 47% above power law support. When PMI rises above 50 expansion, that median jumps to 2.33x. What the hell is this guy talking about? Let me break it down for you guys, okay? The PMI is the survey the government puts out every month on how the economy is doing, okay? And they scale that on like a 70 to 30 oscillator, so it goes every month, okay? When the PMI, when the economy is contracting and that thing clocks in below 50, what happens? Well, everyday citizens do not have excess cash to spend into the economy, okay? Because the economy is doing so bad. If you're not in tech, right, or finance, you are doing terrible, okay? Especially when the PMI contracts below 50, okay? When the PMI expands above 50, the average dude has more money to spend and to invest than he would otherwise below 50. Long story short, what this guy is saying is that when the economy is doing great, Bitcoin has a higher multiple above its power law, okay? So a power law is basically this mathematical line these nerds draw, and it just goes, okay, to map out price over time, okay? So when the economy is doing great, Bitcoin has a greater multiplier off the power law average. Higher up it goes, makes sense, right? When the economy contracts, price expression in Bitcoin gets muted. Who would have thought, right? We can also reference, not going to this video, but if you guys are going to check it out, Raoul Powell's work over at Real Vision. He has done extensive work around the business cycle. He's a business cycle analyst. Incredible work there. He has also proven that crypto, the stock market, everything is driven by the business cycle, okay? Makes sense, right? Because the business cycle, the businesses produce the money to expand the economy to make the stocks go up, including Bitcoin now. This is the final piece of the puzzle today, ladies and gentlemen, and I think it is super interesting. This chart shows that long-term holder supply just flipped net positive, okay? Crazy. Meaning the dudes that bought Bitcoin, $1, $10, $30, whatever it may be, have now decided that it is good time to buy again. Holy crap, guys. And Bitcoin's price is sitting around the 90,000s. Insane. So now we have OGs coming back, buying in. We have institutions still buying. We have sovereign entities buying. We have governments buying. Everybody is buying except retail. Why? Because the PMI is below 50. We ain't got no cash to buy. Okay? What does this mean for 2026? It means the bull market is yet to start. All right? Because retail hasn't even shown up yet. All of this price expression has been from ETFs and OGs. All right? And probably some nation states. So the fact that long-term holders have just flipped net positive and Bitcoin's at 90,000 is crazy to me. All right. We have the short-term funding metrics flipping positive. The Federal Reserve balance sheet is going parabolic, right? Bitcoin has found a new daily discount range and is set up with low resistance liquidity run to the upside. Meanwhile, high quality alts like Solana are repositioning themselves for another leg higher. Okay. Guys, the 2026, I cannot express this enough, is going to be a very, very positive year for assets. Okay. So do yourself a favor, get in position, and then come back to this video 3 months from now and say, thank you, Chris. Okay. And with that, make sure to hit that like button, subscribe, comment. I'll catch you guys in the next one.